All right, so today we're going to prepare a worksheet. What's the worksheet? This is not part of the regular accounting records. We have the journal, we've got the ledger, you do the trial balance. All that still has to be done. But this is a tool that accountants use just to really organize all the data. It's called an optional part of the accounting process. Unfortunately, it's not optional for you. We have to learn it. So just to give you perspective of where we started, you've analyzed the transaction. This goes back to chapters 1 and 2. You've done the journal entries. You've posted to the ledger accounts and prepared the trial balance. And so the trial balance, this is the trial balance, the balance currently in all the ledger accounts. Then what do we do with the worksheet? Well, we're going to put our adjustments on, and these are just your adjusting entries. You still have to prepare the adjusting entries and post them, do the journal entries, post to the ledger. But on the worksheet, this is where we would enter the amounts and the accounts that go with the adjustments. Then we're going to add and subtract across and get to the adjusted trial balance. And this will have all the accounts on it with the updated balances. And it's from this adjusted trial balance that you prepare the financial statements. So we take the information for the income statement, and that goes in these two columns. Everything else goes in the balance sheet columns. So in the balance sheet columns, you'll essentially have the information for the balance sheet and the statement of retained earnings. And so when you do the financial statements, you'll have to sort them out a little bit. Okay. So let's see how this works. Let's look at the adjusting entries. It says other data, that's what it's called here. And it says supplies on hand at the end of the month are 500. Okay, so we have to figure out, we've got supplies of 1,100 now. If the balance at the end is 500, it means we must have used up 600 worth of supplies. So what do? We say, okay, we've got to get it so we're not telling the users of financial statements that we have 1,100 in supplies when we really don't. You'd be overstating your assets and get in big trouble. So we're going to make an adjustment, and we'll have to credit supplies 600. So it'll be 1,100 minus 600 will give us the 500 supplies that we really have. Now, you know that any journal entry has to have two sides to it. We've got a credit entry here. So we have to be debiting supplies expense. That's not listed on the trial balance. We've got salary, miscellaneous expense. So we simply add any accounts we need down here. So we're going to do supplies expense, and here's the credit, and here's the debit for supplies expense of 600. All right, that's one. What else happens? Unearned revenues, still unearned at the end of the month, is 600. So we have to go up here and say, okay, we got unearned revenue on the trial balance of 700, and it says it should be 600. The amount still unearned is 600. So how much should we earn? Well, must have been about 100. So we are going to be debiting the unearned revenue account 100, because when we go 700 minus 100, we will end up with the 600 that's still unearned at the end of the month. Now, where does the credit for that go? Well, we earned the revenue, so we're going to be crediting our service revenue account for 100. Okay, so we have debits and credits for both our adjustments. Our columns are adding up. All is good. Okay, salaries for the month not paid at the end of the month are 400. Okay, so we do have salary expense here. So we can just say, yeah, we got 400 more salaries that we haven't, paid yet. We'll pay it next week. And we need a credit to go with that. And accounts payable are generally due to suppliers of the company. So usually there would be a salaries payable account that would be used for salaries payable, which kind of makes sense. So it's 400 here and 400 here. Okay, so now as with everything in accounting here, well, not everything, but just about everything, our debits, when we add them up, should equal the credits in the adjustments column. So let's see if that happens. Let's say 6, 4, and 100 comes out to, if my math is correct, 1,100. Whoop. For both columns. Okay, so far so good. Now, our next step is we're going to add and subtract across and get all the accounts adjusted. So there were no changes to cash, debit balance account, so that just comes across as 4,500. There were no changes in this problem to accounts receivable, so that also comes across right here. Supplies, 1,100 minus the 600 gives us our updated balance of 500. Accounts payable did not change. That goes in the credit column because it's a liability. Unearned revenue, also a credit balance account, 700 minus the 100 we earned. We end up with a 600 credit balance there. Common stock, no changes to that. Service revenue is 2,100 because we earned some of the unearned revenue. Salary expense, 5 plus 4 is 9. Now that's a debit balance account, so it goes over here. Miscellaneous expense, no change there. And then we have to make sure we don't forget these guys down here. We got supplies expense of 600 and salaries payable of 400. All right, so now you want to make sure that these add up, and there's no way I can do these in my head, so I'm going to take what I've got here. I think they come out to 9,900 each. When I'm in the class and make math errors, if we're on campus, I can say, oh, I did that just to see if you were paying attention. So if you see anything goofy on this, please email me. Okay. So now we've got the adjusted trial balance. We've updated the entire, this updates the ledger balances to the correct balances now. We're saying, yeah, we really have 500 in supplies. Our service revenue is actually 2,100 and so forth. So now we sort out this information. Income statement is easy. That's just going to be your revenues and your expenses and nothing else. And so we'll do that first. Okay, so your revenues come over to the income statement column and it's a credit for service revenue. We've got our 3 expenses here, our 900 salary, 200 miscellaneous, and the 600 supplies. And we're going to add these up, 2,100 here, and let's see, what do we get there? Oh, we only get 1,700 there. Now is that a bad thing? No, because we want to make some money. This is your revenues of 21. This is your expenses of 17, and so that means that we actually made $400. So that would be our net income. So there's sometimes that, the net income will make those add up. Okay, everything else, and this would be your retained earnings information and your balance sheet, everything else goes on the balance sheet column. So cash comes over directly from the adjusted trial balance. Accounts receivable comes over, our supplies of 500, our accounts payable of 800, unearned revenue of 6, our common stock. If we had dividends, they would come over, but I think I tried to keep this somewhat simple. Okay, now this revenues and expenses are all on the income statement, so those are already taken care of. But then we can't forget things that might have happened down here, like salaries payable of 400. Okay, so now we're going to add these up. And so you go the 45, 32, and 5, and that should come out to, I believe, 8,200. When you add these, you get 6, 7, here you get 7,800. It's like, oh no, those don't add up. But why not? It's because we have to put the net income in over here, and then they will add up. All right, so that's your basic worksheet. What do we do with this information? We prepare the financial statements directly from this because it has everything we need. Income statement is easy. You just have to put it in the right format so that people will think you know what you're doing. You you do a properly formatted income statement, but the information is all right here. For the balance sheet, you have to do a little bit of calculation. The assets are easy. You do, you would put this all in the format of a proper balance sheet. But when you get to retained earnings, you're going to have to see if there's any beginning retained earnings. And on this problem, there isn't. So that beginning would be 0. You're going to add the net income of 400, okay? It would deduct any dividends, and I didn't put dividends in this particular example. And then you would end up with your ending retained earnings for your balance sheet. So that's sort of an introduction to the worksheet. And I would highly encourage you, if you have any questions, if this drives you insane, set up an office hour because I'm around to do them. Okay, that's it for the worksheet.